Hi, I'm Brian McGough. I'm the sector head for the retail space here at Hedgeye, and I want to talk about a couple of things here this afternoon. The first is what's going on with Black Friday sales, and the other one is JCPenney. Now, with sales over Black Friday weekend, I think a lot of people know that they weren't that great. I would say that they're far worse than not great. They were a complete disaster. Now, there's a very important point to keep in mind here. It was not because of the economy. Again, this is not an economic issue. This is because you have retailers who only want market share and they don't care about profitability over this time period. Unfortunately, they rob Peter to pay Paul. They'll have a sale now at a far lower price as opposed to having you go and buy it at a higher price closer to the actual holiday. It doesn't really bode well for how things are going to pan out over the rest of the holiday season. Now, there were a couple of bright spots over the holiday. First is e-commerce. You had Visa, who came out this morning, and they said that overall e-commerce sales were up about 30%. Great number. I was expecting something in the mid-20s, so I was real happy with that. Point two is JCPenney. They comped up 10%. A lot of people don't want to acknowledge that because they hate JCPenney, but they are gaining share. It was something I was expecting. Now, I would like to talk for a couple minutes about JCPenney and why I do really like it, and I have liked it for a couple of months now. If you look at the key assumptions I have to ultimately build up to a $20 stock, the stock's now at 10, it's $1.50 in earnings power, and one of the key ways I get there is by looking at sales per square foot, where they are, where they were, and where they're going to go. If you look at this chart and you take a look to the far left, that little small column there, that's JCPenney, $100 a square foot right now. That's just embarrassing. If you look to the far right, you see Target, great retailer, they're at $3.50. There's no way that you ever see JCPenney get over there, but I just want to have it up there to see where other retailers lie. If you look at the next chart, you can see where I am, at $100 a square foot now. I've got them going to $140. So not a really big climb at all. That gets me to $1.50 in earnings power or a $20 stock. If you look at that next column over, that's Sears. Sears might be the worst retailer on the planet. So I'm assuming that they're aspiring to be something less than Sears, which I think is a pretty big statement in itself. A couple of columns over, you can see where JCPenney was before Ron Johnson ruined it. They were closer to about $190 a square foot. So the punchline is, I don't need JCPenney to be a great retailer or even a good retailer. I simply need it to be a poor retailer, up from being a horrendous retailer where it is right now. That's $100 a square foot up to $140 a square foot. Gets me to about $1.50 in earnings power and a $20 stock. A lot of assumptions in there. I realize that. If anyone has any questions about any of them, please hit me on Twitter at Hedgeye Retail. This is Brian McGough. I appreciate your time today. Thank you.